On today's episode, we are going to take a quick look at FSLY. They reported earnings on Wednesday after the market closed, and we can see there was a huge drop the day after earnings. The stock dropped as low as 22.73%, but right now, as I am recording this episode, the stock is only down about 8% from before its earnings, right? That's still a huge drop, but it has definitely made quite a recovery. Imagine if you picked up at the bottom, you would have been already up almost 20% already. So congratulations to anybody that picked up at the bottom. Right now, as I am recording this episode on Friday, the stock is up about 2.3% right now. And this kind of just, I just want to talk a little bit about maybe not FSLY in particular, but we have to remember, right? Not all of our positions are winners. Not all of our positions are going to be losers, right? The question is how we deal with them when things go bad or when things go good. Another important thing is don't just blindly buy the dip. And in today's episode, like I said, we're going to take a quick look at FSLY. We're going to look at some of the green flags, some of the yellow flags, and maybe some of the red flags. But again, I do want to say buying the dip can be a bit risky, in my opinion, if you don't have a plan. One of the ways that prevents me from buying the dip is first taking a huge look at how much money have I invested in a company. Am I willing to invest more? If I'm not, then that's pretty much endgame for me, right? I don't invest anymore and I just let it ride out. So every investor has their own plan on how to buy the dips, on how to deal with some form of negativeness in a stock. So if FSLY was a position of yours and you didn't have a plan, maybe you got a bit emotional, think about that in the future. How did yesterday feel as a FSLY investor, and how can you kind of take that experience that you have and use it for some future investments? Were you just a little bit too heavy exposed into FSLY? Were you not exposed enough, or however it was, whatever the results were? I think it's great to kind of learn from experiences and use it for the future of things. So now off to that rant. Let's just take a look at why the stock price is down. Like I mentioned, a lot of yellow flags, a few red flags, and a few green flags as well. But before we go any further, guys, make sure to hit the subscribe button, the thumbs up, and let me know in the comments what is the next video I should do on earnings. We've had some crazy earnings. So I do want to say, like, we're going to take a quick look at their earnings. It did cause a lot of negativity from analysts. A huge amount of price target decrease. We can see this one went from $60 to $33. This one went from $45 to $32. And this one went from $46 to $33. So it seems like right now the overall price is in the low 30s. FSLY, again, yesterday hit those low 30s. But now it seems like it's all the way back in the 40s. So again, analysts did kind of create, I want to say, more of a volatility after earnings. But I guess as more people digest on these earnings, they try to see that, hey, it's bad, not as bad as a 20% drop, maybe as bad as an 8% drop where they're at right now. Another thing, right, besides the overall guidance or adjusted price targets, they didn't meet expectations in this quarter for revenue, for earnings, or the guidance. They did kind of downgrade their guidance, and that also kind of gave a negativity to FSLY. So revenue this quarter was $85 million. Street forecasted about 86 million. Revenue for quarter three is expected to be 82 to 85, where analysts expected about $89.6 million. So we can see quarter three is already looking weaker than expected, and for the full year, they also FSLY kind of downgraded their guidance. Revenue is now expected to be 340 to 350, where they previously expected somewhere between 380 and 390. And this is lower than their previous guidance, like we saw, and it's also lower than what the street forecasted. The street forecasted on revenue about $366 million in revenue. Now they're nowhere even gonna hit that. So all this, right? Not meeting the expectations for this earnings, not meeting expectations for next earnings, meeting expectations, guidance not meeting expectations for the full year, plus the full downgrades of analysts coming out heavy after the company reported earnings, I do believe triggered that huge sell-off on the stock. At the end of the day, right, volatility is what handles the market. I don't think anybody would have projected that this company would have recovered almost 20% in a matter of 24 hours, right? So volatility definitely It definitely provides great returns for investors. Now let's take a closer look at their earnings presentations. And like I said, some more yellow flags, some more green flags. But before we go there, guys, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks, and right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So right off the bat, if we take a look at revenue was up 14% compared to the same time last year. So they're still seeing some growth, right? 14% nowadays is definitely not the best in my opinion, especially for some of these high growth stocks. Again, same time last year, right? What was happening same time last year was pretty much the peak of everybody just being at home. This is more of a usage-based revenue company, so they collect more revenue as more usage is being used on their platform. So same time last year, a lot more people were online, a lot more of their customers were using more usage of their platform, so the revenue was pretty high. So it's still impressive in my opinion, right? 14%, not huge growth, but compared to where the company was at last year and where the world was at, still seeing a 14% growth is not the worst thing. Unfortunately, non-GAAP gross margins did take a hit, and we are going to take a quick look at that. One of the main reasons this company is being negatively affected in guidance in overall non-GAAP gross margins, and for both Q3 and for the full year, is this outage this company had. And it also took some effect on Q2. All right, so now let's take a quick look at some of their customer stats. This is now reflecting the overall combination of units. So for those not familiar, FSLY did acquire Signal Science on October 1st of 2020. And for the past few quarters, they've kind of been talking about customer growth and overall customer stats as separate companies. They've been talking about it as Signal Science and as FSLY. Obviously, eventually, this is just becoming one single company, so they're kind of reporting everything together now. Some investors might not like this because you're not really able to compare just FSLY's organic growth compared to a year ago. But I want to say that is no longer the case, right? This is now 2 companies. So this is now one company. So it's better to show the combination. But we can see, right, average enterprise customer spend is a little bit less compared to a quarter ago, but a bit higher compared to 2 quarters ago. Enterprise customer growth, which is their biggest revenue segments, they drive about 89% of total revenue, is up compared to Q4 of 2020 and Q1 of 2021. Right now sitting at 408 customers. So overall, things are looking good in form of enterprise customer counts. Total customer counts are also good. I do want to say some yellow flags, and this is, again, I do believe it's affected due to the outage, which kind of sucks, right? Like I mentioned, I don't think the outage happened. We're going to see in the second quarter. And it did take a huge effect on the company in forms of Q3 and full year guidance. Some of the yellow flags that I want to take a look at are these net retention rate and the last 12-month retention rate, right? We can see for the past 3 quarters, it's kind of just been decreasing and decreasing. Same with last 12 months net retention rate. So I do believe these are some other yellow flags that are coming out for FSLY, something investors might not be excited about. All right, so now that we took a look at their earnings, let's take a quick look at this outage, right? This outage I keep talking about, and it really did make a huge impact on the company. So during the second quarter, FSLY did manage through a significant outage that impacted their Q2 results, and the outage and some certain delays have also impacted the Q3 guidance and full year outlook. So things aren't looking too good. They had some customers, a couple of customers, one of them being their top 10 customers. And we know the top 10 customers make a good portion of this company's revenue. So one of the top 10 customers have yet to return their traffic to the platform. And again, when you hear something like this, Big yellow flag. Several customers, they do say that several customers not related to the outage, just related to these customers' timeline, have delayed some of their launch of their new projects, again causing an impact on the Q3 and full year outlook. So these are two major, I want to say major yellow flags. In forms of, if we take a look at their earnings transcript, I obviously did look at that for you guys as well. In form of their earnings transcript, they talk a lot about this as well. They do believe that their confidence level is still pretty high for these customers that have delayed their projects to come back. They say that this isn't a fault of FSLY's outage. This is just more a shift of timeline. Unfortunately, it kind of reacted at the same time with the outage. So a lot of investors are kind of seeing it's related to the outage. FSLY is trying to assure us that it's not. Again, investors can take this either way. So they do believe that this is expected to ramp up later on in the back half of the year, and their confidence remains pretty much high. Between this number one top 10 customer, they didn't really give too much of an insight of if that customer is expected to return. They do say that they're talking with them, and there is a possibility, right? There is a possibility of return, but I don't feel that same type of confidence as these other customers for that number one. And I do believe that top 10, not number one, that top 10 customer, and I do believe that top 10 customer does impact a good portion of this company's revenue. What else do they say? And due to this outage, right, they had to pay some form of credits. They also had to, they saw a decrease in volume. All this affects companies' bottom line numbers. So again, the outage, even though it lasted a few hours, and this is to my surprise, it definitely took a huge impact on the company. So big yellow flag. The other yellow flag I do want to mention, and I don't know if this is a bad yellow flag, but it's more, hey, let's take a look at it. They do have two new executives in their teams. Usually, you don't like to see a huge change in executive, but they have a new CFO that will be joining them later this month. And they also have a chief revenue officer. And this is one that's going to be working on joining this team, on getting FSLY to more global scale. And now kind of talking about their global scale, they are also expanding into new countries. I do believe they talk about it in their shareholder letter. Let's take a quick look at it. But they are expanding. This quarter, they entered 3 new markets, Lima, Munich, and Ghana, and now totaling 61 global markets. So in their 28 countries, 61 markets right now. So they are continuing to expand. Great news, right? So still, the company, definitely some yellow flags, definitely some red flags, definitely some green flags. So like I said, it all depends on the investor and how you're feeling about the company. There's always some risk, always some gains behind it. So now the final thing I actually want to take a quick look at is this company's guidance. And they do talk about it, but I also want to take a quick look at their balance sheet. So they ended Q2 2021 with $1.1 billion in cash, restricted cash investments, including those classified as long-term. So they have plenty of cash right now, $1.1 billion, especially if in cash flow from operations, they're only burning about $17 million. So for those not familiar, FSLY is a company that's not profitable. They're also not positive in cash flow from operations at the moment, but they're not burning that much money, right? Burning about 17 million a quarter, assuming for the full year that you 4 times that. So that's not even 100 million a year. With the amount of cash and investments that they have, this is a company that will be able to survive numerous years. So for this company to go down under anytime soon is not anything I would put as a red flag. But still, they're not profitable, not positive in cash flow from operations. Like we did, I actually talked about the guidance for already, but I do want to mention, right, they have about $340 to $350 million for the full year of 2021. So let's take a quick look here at Y charts right now. Yeah, their price to sales ratio, I don't know if it's updated with current guidance, it's around 11.38. I don't think that's half bad, right? So earnings, like I said, plenty of yellow flags, plenty of red flags, but also a few green flags. And remember, it's all about risk management and portfolio management. Don't overextend yourself and then kind of regret it if this company goes down, right? Because we understand the risk, we should understand that, hey, maybe I shouldn't do a huge position on FSLY, but maybe a small to medium sized position wouldn't be the bad thing, wouldn't be the worst thing at these types of valuation metrics. So I hope you guys enjoyed today's episode. Take care, have a good night, and see you next time.